Well, I feel a lot better now because we did the smart money moves for May. I told you. I told you that we would do it. Well, we have some listener questions. And by the way, if you have a money question, you can easily get it to us by going to christianmoneysolutions.com. You're going to click on the show tab, which is right up at the top. And you'll see on that page a form that says ask a money question. Fill out that form, click submit, boom, you're done. That's all that you have to do. And we try to answer as many questions as we can on this podcast. Stephen sent us a question. He wrote, we want to buy a home, but do not have enough money for a down payment. I know you like a 20% down payment, which would probably be about $60,000 for us. We do have a 401k, and we're wondering what your thoughts are on withdrawing $40,000 from it or taking a $40,000 loan from it. Which is better? Thank you. Stephen, thank you so much for sending in your question. I really appreciate it. I'll go ahead and give you the short answer. I actually don't like either one of those options. I'm not a fan of removing money from retirement accounts, whether it's considered a withdrawal or it's considered a loan. I'm not a fan of either one of those moves. Now, you said that I do recommend having a 20% down payment. That's correct. For those of you who are not familiar with the three questions that I encourage people to ask when buying a home, I want to make sure that you answer yes to these three questions. Will I live there for 5 days or 5 days, 5 years or more? And the reason why we want you to live there for 5 years or more, because that's really when the financial benefit starts to kick in with home ownership. Before that, it's really, if you're going to move within 3 to 4, maybe 4 years, it is probably better for you just to rent. So we want you to live there for 5, or at least plan on living there for 5 or more years. We do want you to make a 20% down payment. And then we also want to make sure that your monthly payment, this includes taxes, insurance, everything that's wrapped up into that monthly mortgage payment that you make. We want to make sure that that is 30% or less of your take home income. Okay, so that is those. We want you to answer yes to those three questions. Now, why 20%? Well, it certainly helps you to avoid PMI, but more than that, it demonstrates your financial stability. It demonstrates where you are in your finances, which is why banks put on PMI if you don't put down 20%, because you're viewed as a riskier borrower. And so you're more likely to default. Now, I know you're not planning to default. I get that. I totally understand that. Nobody goes into a mortgage thinking that they will default, but based on their statistics, they see that those who can't put down 20% are at a higher risk of default. And so they require that private mortgage insurance. They're actually taking out insurance on you, and you have to pay for it. You have to pay for insurance on you because you are considered riskier. Now, Stephen, you're looking at a $60,000 down payment, which means that you're looking at a home that's going to cost about $30,000. So I think that I have that correct. But I don't like the 401k options. You can take money out. Yes, you can take money out of your 401k. You can take a withdrawal out for hardship reasons. You are allowed to do that. And yes, you can't. One of those reasons is to buy a home. So yes, there is that possibility. But when you take it out, first of all, you're going to have to pay taxes on that. You're also going to pay that penalty if you're under the age of 59 and a half, which is 10%. And the big issue is that when you take it out, you lose all that. You lose the power of compounding, right? We start making money on top of your money. Man, it really sets you back with your retirement. And it's just, I can't recommend you doing something like that. Now, with the loan, you take the money out usually for 5 years. I believe the maximum is $50,000. And when I say 5 years, that's usually the term. They require you to pay it back, and the interest is basically paid toward your account, right? You're essentially paying you in a way, right? That's often how it has referred to. But the problem with taking out a loan is that if you happen to lose your job or you decide to get another job, then you pretty much have to pay that back immediately. And if you don't have the money set aside yet, then you're going to be in a lot of trouble there with that with that loan. And then if you happen to default on the loan, then it is considered a withdrawal, and you're going to have to pay that penalty as well. And even though you're paying the interest, you're paying yourself, right? It's going back into your account. You're still missing out on your retirement savings. It's still missing out on compounding. Oftentimes with your 401k, you can't contribute until you do pay back the loan. And man, you can just miss out on some just incredibly valuable years for retirement savings. And so I just can't recommend you going either one of those routes. And I'm not alone by any stretch of the imagination. There's a lot of people that will say, don't go this route if at all possible. So here's my suggestion to you. Just keep going, man. Just keep going, keep doing what you're doing right now. Keep saving. You can, of course, you can maybe look at a lower priced home, so you don't have to save as much for the down payment. I don't know what market you're in, so that may or may not be possible. You may look at a townhome as opposed to a single family home, or you just may rent, and that's okay for this time period. It's okay to rent. Renting is not a bad financial move. Oftentimes, it's viewed as wasting money. It's not. It's really not. In fact, it's the perfect thing to do if you're trying to save money or pay off debt, because it creates stability. It creates predictability. And so renting is not a bad financial move in some situations. And I think you're there right now, just based on your email. But yeah, I would not recommend doing the 401k loan or withdrawing money from there. Stephen, thank you so much for your question. Obviously, if there's any follow-up questions that you have, do not hesitate to reach out to me. Okay, Brandy sent in a question. She wrote, "Hey, Art, I am leading an 8 Money Milestones small group." All right, Brandy, I love it. I'm excited. I'm really excited about it. Since we are watching the videos together, do you recommend everyone get their own account, or should they just buy the workbook? Brandy, hey, I am pumped for you. I'm genuinely excited for you, and of course for your group. But because you're leading this group, you get to be a part of something life-changing. It's going to be so much fun. And of course, if you have that leader package that we provide, man, you have all the tools that you need to lead an amazing small group there. So your question though, should everybody get an account, or should you just go and buy the workbooks? Everybody should get their own account without question, without hesitation. I say that. And the reason is simple. It's the best deal by far. So the workbook costs $27.97. If you were to have them purchase their own account, so they each get the participant version of 8 Money Milestones, not only do they get the workbook, so that will arrive in the mail, but they will have all the access to all the videos for a year. They will have the Essential Emergency Binder pages, right? So they have that PDF, and there's 12 other resources that are provided in that participant edition. Plus, they're going to get encouraged all along the way. So there's emails that go out that get sent to them. And so there's just a lot, just without question, you go with the participant version as opposed to getting everybody a workbook. The reality is, if they just get the workbook, they're missing out. I mean, the workbook's great. It really is. I love the workbook, but they're missing out on so many other tools, resources, and pieces of encouragement that they could have. So if you want to buy in bulk, you can, of course, reach out to us. And what we can do is that we can provide you a code for them. If you're maybe part of a church that's going to purchase those the participant editions for them, we can send you codes, and we'll then invoice you and make it easy for you there, so that you can get going on that. But anyway, if you need that, reach out to us. We'd be happy to help you and guide you through that process. But yeah, 100%, you want to make sure to make sure everybody gets that participant edition, because they're going to get the workbook anyway. So why not, at the exact same price? Both are $27.97. Great question, Brandy. Once again, I am so excited for you. This is going to be great. You're going to have a ton of fun. The conversations are going to be amazing. You're going to watch people's lives be changed, not because of me, not because of anything that I do, but because you're looking at scripture. And I'm confident in God's word that when you dive into it, hearts are changed, eyes are open, and yeah, it's going to be fun. If you have a question, not just you, Brandy, but everybody else that's out there listening, if you have a question, do not hesitate to reach out to us. You can do that by going to christianmoneysolutions.com. Click on that show tab right up at the top, and there'll be a form that says ask a money question. Fill out the form, click submit, and that's all that you have to do. And I look forward to getting your money question.